Good morning, good afternoon, good evening, and welcome to the TGI. Thank God it's Friday, the 11th of November, Veterans Day. TGI Friday webinar here, the Bull versus Bear webinar. Steve Miley on the call for TradeDay.com. Welcome, everyone. Wow. What a day. What a day was yesterday. I do hope you guys jumped on the right side of that and stayed with it and ran it. And don't be too disappointed if you took your profit too early, because a profit's a profit. Okay, you weren't probably expecting it to go as far as it did, but it went there pretty quick. So I'm hoping you guys were the right side of it, got on it as it went, and made some good profits. I'm hoping that's what happened for you. All worked out quite nicely for me, so I'm happy with that. Market's looking super positive at the moment. You can't say anything other than that, right? Obviously the CPI release was softer than expected on all counts, core CPI as well. And markets, just leapt on that. And you know what? Kind of one of those, days that I've spoken about in the past, game changer days, right? A game changer day. When you get these kind of big macro fundamental shifts, there's a behavioral sentiment shift, and there's also a technical shift. They're all kind of aligning. And you know what? Funnily enough, the last time we talked about this was the last CPI print, when you had that massive turnaround day back at the low. And I said then I thought that the low was going in, and the low that still remains to be the low from the last CPI day. The two CPI days, it's the most important piece of data that we have out there at the moment, with inflation, front and center on the economic agenda and the central bank fight against inflation. And you know what? The market is clearly showing us it's cheering everything that we get when there's a positive, and the market's kind of under. You'd have to say the market's underweighted on stocks by the looks of it, from a behavioural side, from a positioning side, from a psychological side. And then you'd have to also say that, technically, again, as on the last piece of data, the CPI data, when we had that big turnaround session, it was a big technical day, a bullish reversal session. Very, very positive on that last CPI data day that we had back in October. The same thing. We've had the same thing. Big technical statements made yesterday. Yesterday was the biggest update since 2020 for the S&P, over 5%, 7% on the Nasdaq. Boom. Yeah, I think Amazon was up like 11%. Tech stocks just surging higher. Yields, okay, obviously the move to lower yields as well. So all of that, dollar had its biggest down day. What did I see today? Dollar, is it here? Dollar flags up the biggest daily fall since 2015. Massive, right? Massive. Biggest daily fall in the dollar since 2015. So big days across asset classes, guys. So super positive on so many fronts. It's setting the tone, for today. We've got follow through on the upside. Further positive news today on China. We'll talk about that shortly. Even the UK data in here, GDP data. Obviously, GDP very backward looking, right? Preliminary GDP data, but very backward looking GDP data. But nevertheless, look, we're looking for a 0.5 contraction in quarter on quarter, heading into recession in the UK. However, it came in at minus 0.2, so nowhere near as bad as expected. Industrial manufacturing production data beat expectations as well. So the numbers globally, it's not just the US, numbers globally showing that markets are, more robust than we'd anticipated. Not so much markets, sorry, the economy. Even though, yes, we're slowing, which you'd expect after the interest rate hikes that we've had globally in the US, in the UK, and everywhere else. Nevertheless, growth data not as impacted as badly as we'd anticipated. What have we got coming up today? Let's take a look at the head now. The look ahead in here. Nothing to really bother us too much in here. Remember, we said about this the consumer expectations, consumer sentiment data in here as being important. There was a headline yesterday we looked at. So let's just see if this reinforces this Michigan consumer expectations and sentiment data. Does it reinforce what the CPI told us yesterday? That'll be interesting. 10 o'clock Eastern. Watching out for that. Okay, that's really the focus that we've got going into this afternoon. And then obviously follow through. End of the week, right? Massive day up yesterday. fear of missing out. Are we going to get a follow-through rally today? We've already started on a positive foot into today already with follow-through gains. Further positive news out of China. We'll talk about that shortly. So do we get a follow-through on the top side? And all that underweight. We've looked at previously the old Merrill Lynch, now Bank of America fund manager survey, showing most overweight on cash. Biggest cash reserves, most underweight markets since at least the financial crisis, and if not before. So there's a lot of money to be put to work that's sidelined amongst the fund managers. And now we've got two strong days after the two sets of CPI data for the last 2 months. Is longer term money coming into play? Are they going to not want to miss out going into next week? Do they put the money to work today? Do we get a follow through? Having seen what we did yesterday, as I say, 7% on the Nasdaq, 5% on the S&P. Oh gosh, what are they? So let's take a look at the headlines. 5 things you start your day from Bloomberg. So obviously, disinflation euphoria, slowing inflation, blah, 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 blah. Bond traders are declaring victory in Federal Reserve fight to curb overheating in the economy. So yeah, all good. But the optimism may be tempered. The Fed, Jerome Powell's favourite benchmark for recession, inverted. So remember that, the inversion. Remember we looked at this before. Where's that? Here it is here. So this is the curve. It's the 18-month forward. So it's the 3-month T-bills, 18 months forward compared to current T-bills. This is the part of the curve that Powell, it's a Fed study shows that this was a better, here it is, look, Fed research paper first highlighted in 2018 the importance of this forward curve as a more reliable recession indicator than traditional yield curves. And Powers flagged it as well, that inverted. So it tells us we're going to recession. So does that mean then the Fed look at this and say, well, we're going into recession potentially, and also we've had two better than anticipated CPI prints, and the market's reacted kind of positively to the last couple of CPIs. So inflation's slowing. Does that start the Fed to start pivoting? And it wasn't just, by the way, it wasn't just the fact that we had the CPI data come in better than expected. But do we have it in here? I've seen it somewhere. No, it's not in here. But basically, we had a whole host of Fed speakers yesterday who kind of reacted to that data and indicated the slowing, a slowing of the pace. It doesn't mean we're cutting rates, right, guys? I'm not suggesting they're going to be cutting rates anytime soon. But it means a slowing of the hikes. And the Fed speakers yesterday indicated that, reinforced that, okay? And look at where we are now. Do you remember this? We've been saying it's been hovering around 50. This has been climbing slightly higher, now 80%, but only a 50 basis point hike at the next meeting. If we go out into next year, remember what the rates, this is March, the peak in rates was 500 to 525, right? Look where we are now. Remember it was 500 to 525? This is March, here's May. Peak in rates now 475 to 450. June, 475 to 450. So we've knocked off 25 basis points in the peak in rates, okay, as well. And if we then look out, 475, 450, 475, 450. This is July. September, 475, 450. November, 450, 475 is the peak, implying that by the end of the next year, in 1 year's time, November the 23rd, in here, November the 1st, on 2023, there's in a year's time, the anticipation is potentially the market started to price in a cut, the first cut. So the cut is potentially getting priced in for next year now, okay, the back end of next year. So certainly that CPI data has been a big shift. The pacing rates, almost certainly going to slow. The peaking rates potentially not as high, and also the first cut coming sooner. Okay, so all of that is very, very market positive. Hence the 5% on the S&P and the 7% on the Nasdaq yesterday. Hence the follow through that we've seen already today. That's also been helped by this in here. So forget the crypto collapse. Crypto's still looking negative. It did bounce yesterday with risk assets. Forget Twitter bankruptcy. Okay, not pulling the markets down at all, even though Musk kind of indicating that they have to, generate some cash. Otherwise, bankruptcy risk in here. But this was a positive as well. Chinese authorities eased some COVID restrictions, and got some headlines on this. Chinese stocks in US jump on watershed moment for COVID policy. Okay, so certainly positive. China eased some of the quarantine rules, pulled back on mass testing. That's seen a follow through on the upside on Chinese stocks overnight, and also then helped us continue higher going into today. Okay, so that's what we've had there. The Chinese stocks futures point to fresh gains on Wall Street. Futures up, follow through this morning. China stocks parry gains as rising gains thought reopening hopes, but certainly moving towards that reopening. Equity rally extends as China adds to US euphoria. Covered all of that. There's the yield curve stuff. We've already spoken about that. The dollar as well. We've spoken about the dollar already. Wasn't just stocks, right? Bonds had a massive day as well. I'll go take a look at the bond chart in here. Let me pop this one out. Interactive chart. Bonds. So this one load up. US 10-year. Boom. Huge day, right? You've got a double top there on the bond market, okay, through that low there. Also to get this low in here. So it's massively double topping yield. So pushing lower in yield, aiming lower in yield, higher in price. Look, back here, it was only a few days ago, we're at 4.25 basically. We're at 3.8. Huge move, right? And there's risk that this pushes significantly lower. What else do we have? So yeah, it wasn't just. And if we go and look at what we've had, we've got follow through on the upside. These markets were open and picked up a lot of the gains that we had yesterday, but follow through into Europe this morning. We're up about 0.5% in France and Germany, actually down on the FTSE. But if we look at US this morning, had those momentous gains yesterday, 5.5% on the S&P, as I say, over 7% on the Nasdaq, nearly 4% on the Dow. And we're follow through this morning around 0.5 to 2/3% up for the major US indices on the follow through. So all positive. Let's take a look at the charts. I'm going to have very little to say in here, guys, right? Look at that bar, right? It outstrips even actually not quite. You've got this big negative bar here. But apart from that one there, I think that was CPI as well. I think that was the CPI data from September. But there's the October CPI data. I think that was CPI. 13th of September, I'm pretty sure it was. So a massive day. It took out that peak there and that peak there. Really big for the S&P. Again, bottoming pattern here, where it's a double bottom. You'd argue it's a double bottom up through there. And then not only here, though, if we take a look at the Nasdaq. Sorry, that is the Nasdaq, excuse me. Nasdaq got close, didn't make it yesterday, but then did on the overnight. Sorry, that's the Nasdaq. Here's the S&P. So the S&P took out the peak easily yesterday, and then peak over here as well, and then further resistance up here. And there's the September sell-off there. So we're getting into that September sell-off from the, I think that's pretty sure that was the CPI data that day. So yeah, massive in here, really, really big. I can't, and then I'm not going to go and do loads of analysis in here, guys, because look at, boom, and then it goes again, and they're going to gain overnight, and now it's just sitting there like flagging. For me, I think there's real risk we get another day up. Obviously it takes out some of this support. I'm going to say below 39.57 in here. You may get a correction day. I don't think we'll get the correction day, not on a big day like that. But I was wrong back here. So we go back to the daily. I was looking for it on this day here after that big day. I did call that as the bottom. So it was the bottom so far. So that's cool. But then the next day we had a big correction day, and it wasn't until then the day after that you saw the punch back higher. So that was the CPI data in October. And then on the Thursday as well, on the Friday it reversed. We gave back a lot, and then it wasn't until the Monday we pushed back higher. So we could see that again. I'm not discounting we don't see a dip back down low today, but the way we've acted overnight, for me, given the two big prints, is a massive day. I can only play this from the long side. So yeah, this is, if it does undercut the low there, say 39.57, and then if we go onto the Nasdaq, back through there, I'm guessing 11.620, then it looks a little bit more wobbly. But whilst above those levels, for me, it's just upside. Let's take a look at gold and oil. Gold in here, again, another punchy day. We said that could potentially be out there. Remember, we looked at the flag, another flag, another flag, and here they are, the flags on the 15-minute charts. We spoke about this. That was the previous rally, flag, another surge, flag, another surge. Could gold go again? Right, it's been a momentous rise for gold. Again, I can only play that from the long side. Whilst it's above that little swing there, or this swing here, really, whilst it's be above 1746.8, I would want to be playing that from the long side. Even minor support in here. Where are we? 58.1 looks positive on gold. Let's take a look at oil. Not as good a rebound yesterday for oil. It did rebound though. It does look positive. Dipped below this support in here and then rebounded. Doji pattern yesterday, but massive follow through on the upside today. So gold turned a corner. Sorry, oil. Excuse me, not gold. Oil turned a corner in here as well, and oil pointing higher again. Again a little bit of a dip in here more recently, but again, I can only play all this on the long side. It's massive risk on, for me, and I think there's just further upside. So, and if it takes out these minor supports, you may get a deeper correction. So do watch out for the correction. Don't be rigid. The market moves massively yesterday. It could easily correct, and just want to remind you, that we did correct after we had the big rally. Last CPI data on the Friday, it did correct lower. For me, though, having had two of those, back to back, I know there's a month between them, but I think, for me, it's all very, 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 very bullish. So yeah, I'm going to wrap it there, guys. I'm going to wish you all a great trading day. Stay safe, be careful, and have a great weekend too. I'll be back with you with another bull versus bear webinar on Monday.